Okay. Hello, everyone. I'm General Secretary of ATVMI, and as you know very well, that ATVMI is one of the very most important financial institution of the under the umbrella of the Islamic Development Bank. Sorry, do you hear me? Okay, all panelists, I would like all my panelists to open unmute to change.
Yes, yes, we can.
Thank you.
Yeah, we can hear you.
Mr. Ökkeş, could you please open your unmute position? Yes, okay,
Yes.
thank you. Thank you very much.
Now.
So, we are at FIMI, you know that one of the important financial institution under the umbrella of the Islamic Development Bank. And also, I would like to thanks to all participants, and I see that there are lots of participants from all over the world, especially from the different countries and different continents. And so we have arranged that clock, taken into consideration that time differences and zone differences. So that's the most important on proper time all over for the world, because sometimes it is might be problem sometimes. So firstly, I would like to thank especially to my panelists, Mr. Muin, Öztop, Mr. Ökkeş, Emin, Balçiçek, and Professor Dr. Mesut KARAKAŞ. Today we will talk about the fintechs. Fintech, you know, and we all very well know. We all know very well that fintechs are becoming very, very popular and very, very important all over the world, especially in the financial system. So, firstly, we can separate that rising value of the fintechs all over the world before COVID-19 and after COVID-19. So, after COVID-19 pandemic crisis, we have realized that the importance of the fintechs are skyrocketed. We have seen that the importance of the fintechs very well and very open in especially in financial system, financial sector. So we all know very well that fintechs are created lots of things in the financial system and in the financial inclusion. After pandemic crisis, epidemic crisis, lots of, as I said before that, lots of things have changed from the banking system, from the payment system, from the e-commerce system, especially that home office working conditions are changing all over the world. Lots of company changed their system as home office working. So the technology are changed all over the world. The fintechs, especially the fintechs, are a very important role in financial system and in the banking system, in the payment system, and all over the world. So from our perspective today, we will discuss and we'll try to discuss the importance of the fintech in the financial system. So as I said before that, today we have three very distinguished and very, very important, very, very special presenters. And one of the presenter is Professor Mesut KARAKAŞ. And Mr. KARAKAŞ is, I would like to introduce them shortly. He has undergraduate and master degrees from the Balçiçek University, which is one of the most important university of Turkey. He accomplished the PhD studies in economics at Marmara University. He holds capital market activities advanced level license. He worked as an assistant and associate professor in the Department of Economics at Gebze Technical University. Currently, Dr. Mesut KARAKAŞ works as an associate professor in the Department of Economics at Yıldız Technical University. He is interested in financial markets, economic policy, and financial modeling. So, yeah, Mr. KARAKAŞ, the ground is yours, please.
Yeah. Thank you for the introduction. Hi to all participants. Today I want to talk about application of blockchain technology in the new normal. And I will talk about actually central bank backed digital currencies. Why? Because I am an economist and there are a lot for the central bank to do in the new normal. Let me share my slides. I prepared slides. Give me a couple of minutes. Yes. Here. My slides are on screen, I think. There is no problem. And I will stop the video to make things simpler. And I will talk about the slides. And let me arrange the windows a little bit. And here there is another window. The role of money, if we go back to our undergraduate studies, we can define the role of money with three facts. Money is a medium of exchange. We measure value with money, and it is a store of value. And we see that it is a standard of payments. And whatever carries these roles, we call money. And but we have some different kinds of money. We got digital currency and electronic currency, and we got actually paper money. But there are differences between them. For example, we define the digital currency as a currency that is available exclusively in electronic form. By using this digital currency, you cannot turn your money into paper money. But in the electronic currency, now our central banks, our banks use this technology. You can go to an ATM and you can get money from your account, because in your account there is numbers. There are numbers that define your balance, and there is a contrast between them. But we see that digital currency never takes physical form. It is on the and in the network. And we got some currencies, for example, Bitcoin or Ethereum, or there are many coins, altcoins, blah, blah. But what are they? Do we want them to use in the future? There are difficulties about these currencies. For example, these are not backed by a central bank. Some currencies are backed by corporations such as Facebook. And there are also some currencies that are backed by an asset. But what we see that the markets for these cryptocurrencies are immature. Why? The markets do not reflect the expectations of the consumers, and the markets are very volatile. Because of that, because of the high volatility, we see that these cryptocurrencies are not candidates for money, for real money in our definition. And I call these as speculative assets. and there are many people who call these as speculative assets. And but our focus is not on these cryptocurrencies. We will talk about central bank digital currency. And what is the difference between cryptocurrencies and central bank digital currency? A central bank backs the digital currency, and it is actually a legal tender. And when we look at the progress of digital currency creation, we see that no country prepared a digital currency, but there are some tests. For example, in China uses yuan, digital yuan, and tests it in some areas. And in US, there is a project which is called Project Hamilton, but the project is not successful yet. And what is the difference between central bank digital currency and physical money and cryptocurrencies? We can see that central bank digital currency is very similar to physical money, but there are some problems within the transfer mechanism. If a transfer happens with a central bank digital currency, then the transfer is accomplished immediately and it is irreversible. But in physical money, the transfers are only promises till they accomplished, because you have to move the account or the money from one bank to another. And as we see, the central bank digital currency is a legal tender. You can buy or sell anything with using this money, but cryptocurrencies are not used very much. There are some forms of cryptocurrencies that are heavily or frequently used in some areas. For example, you can buy Tesla with Bitcoin, but we don't see a wide use of cryptocurrencies. And there is actually a big problem with the cryptocurrencies, which is taxation. And I think that because of the taxation, the governments will intervene at some point, these cryptocurrency markets, because they lead to tax evasion. What are the benefits of digital currency? As you see, you can make faster payments, and the international transfers are very cheap. You can access 24/7 to these currencies, and there is no need for a private bank as an intermediary. Why? Because you will use the central bank for the transfers, and there are a lot of people, poor people, which do not have accounts or who do not have relationships with banking sector, and it is good for the poor also. And there will be efficiency for government transactions. And also we encounter with some difficulties or some disadvantages of digital currencies. And we see that there are a lot of digital currencies, Bitcoins, Ethereums, altcoins, and it is very difficult to navigate between them. And we have to learn how to use them. The younger generations can learn them very well, but the older people may have difficulties to learn how to use them. And there are some mechanisms, for example, blockchain transactions, which can be very expensive. What I mean when I call expensive, it can be environmentally expensive also, not focusing on transaction fees. The blockchain transactions can be environmentally expensive, and we see that there are too much volatility in the crypto market. And but one of the difficulty for the central bank to have a digital currency is to create a system and sustain it. And this system costs a lot, and it takes time. And what is the importance of central bank digital currency? This is my main problem in economics. In economics, when there is a paper currency, we cannot determine the velocity of the money. And if we, for example, the velocity of the money in the COVID period is very low. It is very, very low. And pumping money to the economy may not create a lot of inflation. And what the governments do, they pump money, actually they pump a lot of money without a fear of inflation, because the velocity of money is low. Velocity of money means that the times of transactions that the money is used in the economy. And if we use digital currency, we can easily calculate, or we can easily determine this velocity, and we can adjust the money supply by looking this velocity. And so the central banks have the full control of money supply. And if central banks create digital currencies, we will see that there will be a full control over monetary policy, and the central bank will play a bigger, more important role in the banking system. But there are also disadvantages. One, there is a big role for the central bank in the economy, then the private banking system will shrink actually, because some basic activities like SWIFTs or money transfers will be transferred to the central bank. And in the extreme case, if you think a very extreme case, central bank can be responsible for the credit allocation. But I don't think this will happen in any country, because you know, the allocation of resources by the governments are not that much efficient. And another thing which is very important for central bank digital currency is the fiscal policy. In the COVID period, we have seen many fiscal stimuluses. Government sent checks to the people, and they wanted people to spend on real things. But what happened? We see that the money government paid to those people flow to the stock markets or to crypto markets, and you don't see you don't see an increase in economic activities, but the government focuses on the economic activity actually, and because of that we have to have a new system, and this new system can be with a central bank digital currency. For example, central banks can create money on conditions if the money is digital. And these conditions can be, for example, you will use this money only on consumer goods or on oil or on rent. And these kind of conditions can be attached to these digital money. And even banks can create money with an expiration date. If you need money, you have to spend it. If you don't spend it, then you don't need this money. And with an expiration date, central banks can control actually the money supply, and they can target the segments that they want. And I will conclude my my presentation is a little bit short. I haven't dealt with the technical things because it is very difficult for someone to understand the technicality of this procedure. And what are my conclusions? What are my conclusions? Central bank digital currency is a must in the new normal, I think. And I think that cryptocurrencies are not that much good, and they have to be intervened at some point. First, there are a lot of volatility, and second, there is something related to black markets or underground economy, and there is also tax evasion. And we can classify cryptocurrencies as speculative assets. And if we replace these cryptocurrencies with central bank digital currency, we will get a decrease in the transaction cost, and we will increase the efficiency, and we will see that the central bank will have a lot of importance in the overall banking industry, and the private banking industry, let's say the private banking industry, will have a little room to operate. And the central bank digital currency will be a legal tender. It will be backed by the government, and it will be less riskier for the consumers to carry this type of money. And by two important points are the monetary policy, and the second one, the effect on the fiscal policy. On the monetary policy, we will determine the velocity of money, and it is a very hard concept to capture. But if we measure all the transactions in the economy by using digital currency, central bank digital currency, then it will be very simple, and we can arrange the money supply with respect to that level, and we will have a full control of money supply in such a system. And we have fiscal policy targets. For example, we want to target the poor, and we want to support the poor. Then we have to create money with some conditions. Let's say it is a conditional money, and we may provide people to spend this money on real things, we will prevent people to buy stocks with this money or cryptocurrencies with this money, or we even prevent people to save this money. How? We can define expiration dates on a digital currency, or we can define and attach to this money some conditions. And at the end, I think with a central bank digital currency, the underground market will be finished, and the tax evasion will be decreased a lot. And this is my presentation, and thank you for your patience.
Thank you, Mr. Mesut KARAKAŞ. It was very, very important and very, very valuable presentation, especially for the differences between the cryptocurrency and the digital currency. And also, yeah, it is all over the world, it is becoming very, very popular, and the differences between the cryptocurrency and the digital currency and non-fungible tokens are becoming very popular all over the world. So thank you again for that very important and very valuable presentation, and hope that the first thing that I have introduced, I have noticed that you said that the digital currency will be the new normal in the financial sector. Yeah, I believe that the next month, I think we are planning that the next seminar is the new normal. I hope that the new normal in the webinar, our new normal webinar, we will be together about the new normal. What is the normal? What is the new normal? And what will be the new normal? Thank you, Mr. KARAKAŞ, for your very important, very valuable presentation. Thank you. And now the second presentation by Mr. Ökkeş, Emin, Balçiçek, who is a very, very important, very important person in the fintech technology. Shortly, I want to introduce Mr. Ökkeş to all participants. Mr. Balçiçek is a holder of an undergraduate degree from Yıldız Technical University, Computer Engineering, and an MBA degree from Istanbul Bilgi University. He's a PhD candidate in artificial intelligence at Konya Technical Selçuk University. He started his career with developing and managing e-commerce and ERP systems. Mr. Balçiçek played an essential role in the core banking transformation program as an enterprise architect at Kuwait Turk Participation Bank, and he took the lead in establishing Kuwait Turk's Information Technology Research and Development Center in Konya. Konya is one of the big cities of Turkey. He worked as Vice President of Research and Development and Enterprise Architecture Department. He has been serving as Chief Technology Officer at Architecht Incorporation, which is 100% owned by Kuwait Turk. It's a seasoned technology leader with over 16+ years of IT experience, taking taking on entire digital organizations and leading them into the next phase of the growth. As a digital technology executive, he has focused on modernizing financial technology, driving transformation change, and turning around underperforming organizations and technology strategies. He has been teaching fintech management class for 6 years at Sakarya University, one of Turkish university. Mr. Ökkeş, the ground is yours, please.
Thank you so much, Mr. Öztürk. Thank you for inviting me. That's such a beautiful global event.
It's our pleasure.
I would like to say salam everyone to valuable panelists and our precious audience. I am very happy to be here and I hope everything is healthy. Today I have got no presentation slides and that kind of tools. Today I'm going to talk about what are the bank focused on with regards to technology development, where are their future technology competitive advantages going to come from, and how will they respond to fintechs. So maybe to contribute to our main topic. I remind that most of my experiences comes from the banking sector, although the information I will share will come mainly from the banking sector. I will try to include the fintechs as well. In point of my view, there are 5 main reflections in the finance sector with regards to technology development. These reflections are digital transformation, IT modernization, digital attacker creation, cloud technologies, and ecosystem play. If you look at the banking sector, we can easily see that all the banks are focusing on their digital transformation program. Everyone knows that the common digital transformation program has 3 main legs. These are people, processes, and the technology. So each banks are now running their big digital transformation program by considering these 3 crucial particular topics. Most of them most of the banks have created their digital transformation roadmap and started to run. Or some of them are now designing. In the digital transformation umbrella, commonly they are trying to create innovative products and services. For example, in Turkey, all banks are now working on their digital customer onboarding services, which gives opportunity to become a customer without coming to physical branches. So it's so important on the pandemics also. In addition to this, some of the banks have launched their chatbots for providing information about their special products and services to the customers. Besides, these chatbots are now helping bank customers on the mobile branch to complete their transactions easily. We know that there are digital friendly customers or normal customers. So these chatbots are now helping bank customers to, on the mobile branches or digital channels, to complete their transactions easily. Thus, it helps the digitalization of banks' customers to compete with the fintech's rivals. Furthermore, hyper-automation topic is very popular in the digital programs. The banks loves hyper-automating their processes with application development or using robotic process automation tools. Motto is very simple here. Motto is very simple and clear. Motto is here, if computer can do it, let him do it. If computer cannot do it, first teach it, and after that, let him do it again. Last but not least, some of bank launched citizen data analysis training program to go faster. Analyzing data, predicting future, and monetizing their data is the still key success factor for the entire finance sector, not only the banks, but also for the fintechs. Let me some example for digital transformation programs which I heard from the finance sector. For example, Abu Dhabi Bank has embarked on a progressive digital transformation that includes the ADIP Simple Lab, through which the banks has launched several initiative digital products. For example, Express Finance via the mobile app, which provides instant access to personal finance in 30 minutes. And another example from Malaysia, Bank Islam Malaysia has a digital transformation in its banking platform across its entire network. Through this, the bank aims to deliver cutting-edge, innovative solution to SMEs and customers across country. And another example comes from Turkey. Quick has also digital transformation program, especially on its people and processes, because Quick-Turk's banking platform is highly modernized before. To summarize the first item, banks are focusing on digital transformation very well, and they are investing too much to gain sustainability and strategic advantages in the future. Compared to, to compete with fintechs. The second reflection point is IT modernization. We know that the technology is developing dizzying phase. So, the digital technology, the digital infrastructures. So the banks have to remodernize their information technology infrastructure progressively, continuously. So it is must. In the sector, we heard about Emirates MBD is now having an IT modernization as part of its digital transformation by implementing next generation infrastructure to enable their complex IT environment. They are now creating microservices culture into the entire organization and supporting this vision with the people, tools, and techniques. IT modernization usually includes main core banking platforms, digital channels, cybersecurity, data governance, and IT governance processes. And the most important points, among these items, everyone knows that the data breach has huge cost to the banks. So the banks reserve big portion for the cybersecurity in the IT modernization project. By the way, in this point, we have powerful multi-factor authentication product. I will give some detail about later on. Other reflection point is, I mentioned at the beginning, creating digital attackers, digital attacker products and digital attacker fintechs. Nowadays, banks are also creating and establishing fintechs to compete the other fintechs and the sector. Creating digital attacker product is very famous initiative for entire sector. For example, Varba Bank launched its digital financing solution, Express Financing, through which both Varba Bank customers and non-customers can apply via digital platforms with a fully automated processes. And Kuwait Turk has launched Senin Bankan to attract young generation and onboard as a customer without coming. It's a physical branches before pandemic, and now after pandemic, they are now focusing on digital customer onboarding processes. And Emirates NBD launched on live on United Arab Emirates first digital bank targeted at millennials, which is differentiated by empowering its customer in their daily lives, learning and adapting to their individual preferences, like a kind of super app. Establishing or buying fintech is another way to create a digital attack to the sector. This point of view needs venture capital perspective, VC perspective, I mean. Now we can see that the most of the banks create their venture capital funds. Some of the bank has established VC investment company also that manage that kind of funding processes. They are setting up incubation and acceleration centers for fintechs and startups. They become partners by buying shares or creating from scratch, and they are exiting by selling shares and etc. So the essence of the matter is that they adapt to new world by changing their point of view. Is it a kind of technology in the business perspective? Yes, it is. For the competition, you don't need always rocket science. Sometimes we need to change only processes or our mindsets, and it is okay for obtaining unbeatable technological advantages. The fourth area is, in the technology development, the fourth area is related to cloud and software as a services area. Unfortunately, still it is not allowed to provide financial services while using public cloud for the bank in Turkey in the technological perspective, not the government perspective. But this technology limit is the same for the fintechs. The banks and fintechs are in the same competition. In the global era, public cloud provides strong opportunity. The powerful positioning opportunity to minimizing costs of both sides. But in Turkey, it is limited. Maybe in the global, the other countries, fintechs and banks are maybe lucky in that perspective. These platforms support deep knowledge base, tools and services, especially artificial intelligence and cognitive science. This is unbeatable in terms of the data sizing and the technology, scalable technology advantages. We see that the banks are able to use that kind of services to create future technology advantages if it is suitable for the regulations. Banks and fintechs is the same for that point. This kind of cloud services very crucial, very important for the entire sector. My last reflection point, which I mentioned, is ecosystem play. Playing an ecosystem role in the sector. Many banks are now putting effort to develop ecosystem platforms in a short while. It is obvious that the open banking will be the key success factor of the sector leader and the sector leader banks and fintechs to complete or collaborate. It is clear that the open banking creates open banking mindset, open banking culture and tools, creates win-win environment to the parties. If the bank is able to share its services via public APIs, this ability creates lots of digital channels, digital sales channels for free of charge for the banks and fintechs. Now I am asking, is it bad thing? No. Imagine that there are lots of fintechs working for selling your products. It's a good collaboration option. Yeah, it's so cool I think so cool. Yeah, these are my overview about the latest technologies, focusing area on the finance sector to take every reflection point which I mentioned into consideration. As an architect technology company, we are offering some strong products in the field equipped with experience, field equipped experience. I would like to give short brief about two of our product very briefly to show the fintechs and banks technological improvements. First, API Go. API Go allows the banks and fintechs to manage open banking requirements on a cloud-based platform with a unique customer experience. And it allows to share your financial services with fintechs securely while being in accord with open banking regulations quickly and easily. And API Go offers a platform for financial institutions to comply when legal regulations and open banking standards such as PSD2, GDPR, KVKK, and Berlin Group standards and that kind of regulations. And it provides opportunity to create unlimited environments that you can use an API portal and sandbox where fintechs can easily access the APIs. As mentioned before, API Go creates new digital sales channels with very little investment. And it has on-premise and public cloud SaaS options. Maybe further information, everyone can visit apigo.com. The second product is Power Factor. It's obvious that the bank needs secure ways to authenticate customer identity online through their digital channels. This is a feature which highly differentiates companies over their digital processes. Not only banks, but also fintechs. Power Factor provides multi-channel authentication solutions, QR code, Face ID, fingerprint via Android and iOS applications. It empowers the businesses with the safest multi-factor authentication technologies. Each transaction should be secure against all kinds of attacks. Transaction request responser and the content must be made sure to be not manipulated in any way. These products also eliminates the other party costs like SMS, and it also has on-premise and cloud version. As a result, as an architect, our strategy is here being connection point and hub for the financial sector systematically with our products and services. We are kind of volunteer company for building the large and connected ecosystem. I am also volunteer for my professional activities. Thank you for listening to me. Thank you for your patience. I hope everyone stay healthy. Have a good day. Thank you for this opportunity.
Thank you, Mr. Ökkeş. It was very, very important presentation, and it was very, very valid information about us. Especially, I have taken some notes about it that we have talked about it that digital modernization is very important. And after COVID-19 epidemic crisis, I think the digitalization is becoming very, very important, more important in the fintech sector, in the financial sector, and all over the world. And also the effects of the digitalization will play more active role in daily life of all of ours. So I really take note that the digitalization will be our one of the next webinar subjects. I think some of the other important things was that the cloud technology, Mr. Ökkeş, and the hyper-automatic process. And as you said that if your computer do it, let do it. It was like a motto. It will be the motto in the future. And also I have taken notes that sometimes the banks are using the technology or the fintechs to compete with other banks. You said, yeah, that's very important. Also, so in the next future, we will see that some of the technology wars in the financial sector or sometimes in the banking sector. So again, thank you very much for this very, very important presentation, Mr. Ökkeş. And our third presenter and speaker will be Dr. Muin Öztop. Shortly, I would like to introduce Mr. Muin to all participants. Let me please, Mr. Muin. And Muin Öztop is currently leads Mastercard's data and services business development team, covering 12 countries, including Turkey, CIC, and Israel. Muin has 10 plus years of experience in sales and the delivery of consulting projects across United States, Europe, and Turkey. He led multiple projects on digital transformation in banking, open banking strategy, and the developing disruptive strategies in banking. Before joining Mastercard, Muin worked as a project manager at the Boston Consulting Group's New York and Istanbul offices. Muin holds a PhD degree in engineering from Columbia University and the BSc from Middle East Technical University in Turkey. So, Mr. Muin, the ground is yours, please.
Thank you very much. I really appreciate for the invitation. It's great to be with all this distinguished panelists and also participants. I'm going to share my screen for today's presentation. I guess you can all see it, right?
Yeah, good.
Okay, great. So I would like to actually address a few questions in today's presentation. First, I would like to briefly touch on how fintechs evolved and what actually COVID-19 brought us and how actually fintech reacted on it. I'll give some examples. And then I will try to give some insights on what we actually expect us, post-COVID era for financial institutions or also from fintech's perspective. So I would like to first start with evolution of fintechs. When you first look at the first digital move, it was in 19th century indeed. It was the stock ticker marked the first step in digitalization. And banks began to actually launching digital products in mid-20th century. But indeed, it was the internet boom that sparked the paradigm shift and made actually brought us to the second wave. When we are talking about the second wave, actually, there are a couple of things that have changed in the second wave. We have seen more use of mobile phones and mobile internet usage. And with the 2008 crisis, we have seen actually dipping confidence of consumers, and which opened door for non-bank providers. So they actually found themselves a venue to venture in. And today we are actually experiencing the third fintech boom, and there are many regulations triggering like PSD2, as Mr. Ökkeş mentioned, open banking, all the digital KYC as in in Turkey and other markets. They are all triggered actually fintech's evolution. And right now we have many big fintech powerhouses putting customers at the center and growing their business across the globe. And what COVID-19 has demonstrated, this fintechs will be actually there for actually a long time, because they have remained resilient and they will continue to grow, and they will actually continue to threat an opportunity for financial institutions. Looking at all fintechs, the landscape, we see that traditional banking has been already unbundled. We see in every domains, in every verticals of banking, there are sizable players which have received significant investment over the last 5 years. When we look at each domain, in payments, we see Adyen, TransferWise, Klarna kind of players which receiving billions of investments every year. And within also payments, we see every subdomain is being attacked, in P2P transfers, in merchants acquiring business. There are all different type of players challenging incumbent players. In banking, it's the same actually. When you look at the daily banking, we see many players like Revolut and N26 disrupting their markets by offering simple daily banking products, which the big banks could not offer for maybe hundreds of years. So we will see like this kind of challenge in every part of the domains in banking. So what has COVID actually brought us? It brought us like a higher perception and more sensitivity on health measures. So the concept of the mobility has changed. Now individuals are limited in terms of the lockdown and limitations, working in their home office. Home education is now being considered in some markets. We have seen some suffering sectors, right? There are mainly heavily losses due to their dependence on consumer presence or on-site workforce presence. There were also booming sectors, like as you mentioned in the introduction, Mr. Ilham. There are like e-commerce has already like boomed. There are many companies now converting their business, trying to convert their business to digital, basically. And what has actually, what are the implications of all these into financial institutions? There are now new needs to be addressed. There are different kind of like lending needs, different kind of payment needs that has to be addressed. And actually, fintechs have been there for their customers and have been quite resilient on that. Looking at the during the pandemic, like how the customer base of global fintechs basically have changed. Looking at few numbers, we see that fintechs like this is based on a survey by CB Insights, and in 2020. It shows actually the fintechs managed to grow their customer base by 22%. It's a really sizable number. And they managed to retain their customers around like 30%. So these are the numbers that many like incumbent banks within the markets, at least that I serve, are really challenging to obtain. And looking at which industries, which segments, which domains like fintechs have been successful with this, during the COVID. Actually, wealth management and payments have been the markets which has demonstrated more change, and also the lending is another part that which actually have demonstrated like a big move within the COVID. Wealth management, because actually people could not spend. At least some people had to invest their monies in in a very user-friendly, with very user-friendly solutions. So they actually shifted to wealth management. Payments, digitalization was important. There were more people using e-commerce checkout solutions. There were more people using digital payment solutions like contactless or like Apple Pay or Google Pay kind of solutions. So it also made a change in digital payments. So when we actually look at the investment numbers, we also see that during COVID time, the fintechs have actually continued to receive a sizable amount of investments. There's a slight decrease compared to 2019, but regardless, the global venture capital-backed fintechs financing has received 42 billion investments. This is around around 30% of the venture capital investment globally. So fintechs actually get the higher share of investment by the venture capitals. And looking at the financing, as I mentioned, it actually it resonates the figures that I just showed in the previous charts. Like payments, digital banking have been actually the ones that receiving high share, and we've seen also wealth management fintechs receiving significant investment last year. So how did they manage that? Why actually venture capitals continued to invest in these companies, and what do they do? What do they do differently? First of all, they offer a better customer experience compared to most banks. There are a lot of banks are trying to match the experience. In some countries, banks offer like a really good customer experience themselves, but regardless, they are not agile as fintechs. So actually, they are not agile in adapting like new features, adapting new technologies as in fintechs. And the second, they meet underserved segment needs by data and innovation. They actually use data. As also Mr. Balçiçek mentioned, use of data is a key like asset for like all banks, also for fintechs to like growth. And fintechs are already doing like that and managing the data very well. And what do they do with the data? They actually enhance their credit scoring capabilities so that they can actually offer better lending offers. And what do they do also? Like they actually focus on like unmet needs, like underbanked segments, SMEs, small actually merchants, where actually banks are shying away or not basically taking the risk to approach this segment because of their global policies or in current like the policies that they have to manage because they are regulated. They have to explain every point in their assets the balance sheets to every shareholder. They cannot take every risk that maybe like the fintechs can take. And the third thing is agility in collaboration, but also like with open banking in many markets, fintechs right nowadays are finding ways to collaborate and create impact and create value to their customers. There are like many examples that I will also like show a couple of them in the next slides. They don't need to like offer every service to their customers, but they collaborate with others and they bring with other fintechs or banks to offer those services to their customer because they only put the customer in the center. They understand the customer needs and they actually find the right solution. Whether it's a bank solution, whether it's a fintech solution, and they actually do the matchmaking. I'll give some examples on like all these three like buckets that I mentioned, like starting with the customer experience. Looking at this challenger banks, Revolut, Monzo, Starling, these are all from Europe, and Nubank from Brazil. What they have changed in their markets, they actually removed the frictions in account opening process. They actually started offering like simple products that banks couldn't offer. And they also offered like simple loyalty features that created the stickiness that I actually demonstrated in the figure. They managed to keep 30% of their customers, they had actually improvement in retaining their customers during fintech event. And also, they address the needs even during fintech. For example, Revolut, they actually accelerated their expansion to merchant acquiring and QR-based solutions, and also crypto trading, because they saw that actually customers are looking for that. They received further investment to actually accelerate this basically development. Similarly, Monzo launched business banking earlier than expected, and Starling, they actually offered SME online payments insights for their customers. And 26 launched actually new insurance offering for their cardholders. And Nubank, which from Brazil, it provided instant payment services during the pandemic. So these also shows us like how customers in the center and how they are agile to bring the solutions in the market in a very short amount of time. And with a better customer experience, there's another example. This is also like pioneer in money management or personal financial management. It's Yolt also in UK. What do? They actually they aggregate every account a customer has in one place. And what is the benefit? It helps customer to manage their cash flow. That's great. And second, it actually collects every data that customer has, like basically every account, every information, which helps them to give better loan rates for the customers. So this is an example of like how fintechs are using also like data to enhance the customer experience and their offer. I'll skip some of those. As we mentioned, there are certain segments which are underserved by banks and disrupted by the actually fintechs. Like Square is a great example. It's a merchant like POS terminal provider. It started its business like that, but then it eventually expanded. And during pandemic, they also declared that they are going to start SME banking. They are getting the SME banking license to do that. So they started with like simple POS solution, very user-centric, and now they are a giant and actually challenging the big acquirers globally, not only US, but everywhere. Shopify, probably you heard all of Shopify and you maybe had used it. It's an actually integrated software vendor. It provides the e-com, like basically marketplace sales services, but it has also embedded financial services inside. So Shopify has accelerated e-commerce significantly in like the last 5 years in many markets. It's helped like small business owners, even Instagram users to do some e-commerce trade through like their services. And they also provided enhanced services during COVID, and similarly this Stripe. Challenge, another problem solved by Klarna and Affirm. These are buy now, pay later solutions. Buy now, pay later solution actually is what used for e-com usually, and it's kind of an installment solution that we are familiar in many markets, at least in Turkey. It offers customers to pay an e-commerce purchase after 30 days with zero APR, with zero interest. And when a customer comes to the checkout and it uses like basically the service and it receives some customer data from the website, previous transaction of customers, and also customer social media profile, and customers, age or this kind of demographic information, with a very quick form, they kind of assess the customer's credit risk, and then they grant them a credit. So this is replacing credit cards in many markets. We see like a significant growth of these players globally. They started, Klarna started in Sweden, their journey, and now they're all around Europe and also United States. And there are many players around the world, and big banks are also interested in acquiring these players or offering similar services. We talk about collaboration. I would like to give an example of a collaboration framework that Starling Bank uses. Starling is a daily banking company. So they offer like a great experience to their customers. They have like debit cards, they have like bank accounts. Customers can do like money transfer or cross-border money transfer with like really low fees. That's their value proposition. And what they have done, they didn't want to go and create their investment product. They didn't want to go and find like reinvent the loyalty, but they have created their ecosystem. So they have Wealthify for investment, they have PensionBee for like pension investments, they have Flux for loyalty, and there are other like sort of services which they bring in one app to their customers, and they have a revenue sharing model. For every customer that they share, they got some revenue based on the basically agreements. So this is a model that we actually see started to see often, and this is the model where we also see that financial institutions like the banks will also start considering in the near future. So this has been all great, right? It's been all like good news, like how Fintechs has done successfully, but they also had to manage risks, right? There are like cyber risks that they had to manage. During pandemic, Fintech firms have experienced a 15% increase in their cyber security breaches. So because they didn't have the capacity or capability to handle those compared to banks, because banks are with the legacy systems, they are prone to like every like risks they know, and they have like better systems to protect against like cybersecurity risks and etc. I mean, I know it's a generalization, but compared to like an average fintech, currently that's the structure. And the operation risks, for example, the payment facilitators failed to operate during like high loads in Black Friday, in Cyber Monday, due to stress of level of service, because they are not tested for that. They are not tested for growth in high growth in e-commerce, service. They invest, they get investments, they build infrastructure based on their estimates, but not pandemics. They are not doing like 10-year plans because they don't receive that much investment as banks. And they have also business model risks. Even though like some banks or like fintechs that we mentioned, like they offer great experience, they have sizable customer base, they are offering like one type of product. It's not like as a universal bank, like they can diversify the risks. So they have more prone to like swings in economy. If it's the daily banking, for example, TransferWise or like Monzo, which are making most of their money from the roaming of their customers. So since the travel has significantly dropped, their revenue significantly also decreased. So and finally, I would like talk about like what's going to happen post-COVID. We've seen that actually these fintechs have remained resilient and against COVID, and we've seen that actually like they have been successful in capturing share from banks, incumbent banks, and growing and also retaining their customers. So what we see in future is increased collaboration among fintechs and banks and the financial players, because according to surveys, actually, the 88% of the banks surveyed, also the insurers and investment managers, are concerned that they are going to lose revenue to innovators. And more than 80% of the banks plan to increase fintech partnerships because they actually don't have the agility to bring like every proposition to their customers. So they will be also creating their ecosystems to basically offer this service to their customers. And when we are looking at also like banks investments, they are planning to invest 60% of it are planning to invest in startups or offer in-house fintech accelerators. There are many banks in the region that I'm serving, in Russia, in Turkey, also in Europe, that they have in-house basically innovation like centers, in-house fintech acceleration centers. They are investing, they are establishing their venture capital arms to invest in fintechs and have a right to win in this like disruption. So what is the benefit for banks for like with collaboration? First of all, the technology, like they can actually cannot build the entire technology themselves, right? They have to invest in those, and most of the fintechs also develop an IP which banks may not replicate. So they will have access to technology. They will get to speed. Most of the banks are not agile to meet the changes and develop, and the time to market of a product usually is really low. And when you think about the cost, they like also sizably they decrease their cost because of the people and also the infrastructure needs that they have to consider. They will boost innovation, and more importantly, they will break the silos, because most of the banks, at least which are not in their agile transformation journey or like digital transformation journey, working in big silos, and which is actually which is preventing them to create also this disruptive technologies. And of course, it's a benefit to startups because they get wider reach if they collaborate with a bank, and they get greater trust. Because according to surveys, also significant number of like customers, at least in emerging markets, around like 60% of the customers do not like to work with a fintech. They would prefer to work with a bank because they don't trust fintechs. So if like fintechs collaborate with banks, then they will actually earn that trust as well. And they will have access to better funding and also expertise in different areas. So in post-COVID era, we also expect regulations to motivate like this collaboration. And there will be two-way regulations. And we expect also the like with the open banking, PSD2, and with the data privacy regulations, and like know your customers regulation, anti-money laundering regulations. This will all actually work for both fintechs and banks. And we believe that like most of these regulations will benefit to form like more like ecosystem like solutions. I would like to conclude with few key takeaways of this presentation. So first of all, as I mentioned, fintechs, some of the fintechs have remained resilient during COVID, and they will continue to grow and capture share from investments, capture share from the market. And second, banks which can offer competing digital experience that are actually in agile, bringing products in the market, will be able to compete with fintechs up to a certain extent. But the greater value for banks and the fintechs will come with collaboration. And collaboration is inevitable for banks and fintechs. And we will start to see more like win-win business models and that will be formed to offer value to customer and enhance to the shareholders. So this is all I would like to share today. Thank you very much for listening.
Sorry. Thank you, Mr. Öztop. It was very, very important and very, very wonderful presentation. And also it will be very helpful for us, especially for the people who are in a financial system. And just one question, Mr. Muin, so if you let me, that all of your presentations that lots of fintech companies and fintech applications are used by banks or financial system. And especially I noticed that there was an alternative lending fintechs. So if you look at that, in the future, it seems that alternative lending will be a banking system. So, but nowadays the conventional banking system is different. It's a centralization system, and it is guaranteed by the government and by the government or the central banks or supervision agency or the deposit guarantee funds. But in this alternative system, in the what can I say, after the cryptocurrency or digital currency, this alternative lending system can compete with conventional banking system?
Yeah, that's a great question. I think there are like certain limitations for alternative lending, as you mentioned, the asset and etc. And what we believe, after the alternative lending reaches certain size, it will be also regulated under same terms of fintechs. So that as financial institutions. And also the alternative the problem with the alternative lending providers, they are, as I mentioned, like they have higher business model risks. In financial crisis, they will be the ones which will be hit more severely when you think about it. Because they will not be able to actually, they don't have a diversified kind of services to, like basically compensate the losses that they have through their lending business. So what we see in like basically in alternative lending players, they are expanding into new areas to also diversify their business. So they are going into payments area. So they started to make like interchange revenues, like commission-based revenues. They go into banking services, like they go into like collect. They start to collect like deposits for basic daily transactions. So their starting point is lending, and after they reach a sizable consumer base, they expand into like other business to scale and also make their business more resilient against like those volatilities. So will it reach to banks size? And there will be some players which we believe that there will be like in, for example, Square, Stripe. Those are like big POS like players. They are in payment systems, but they will start in the lending business. And at some point, they will like basically create a size that they will either convert to a bank or collaborate with a bank, so become regulated. So there is like a limit, there is a threshold where an alternative lending player can operate. That's the short answer.
Thank you, Mr. Muin. So, yeah, so the notes, all of our presenters in their presentations are very, very important. So, also, it looks like that it seems that lots of times we will be together in our next webinar. Hopefully,
sure.
Hopefully, because the lots of things, the cloud technology, technological advantages. And the open banking system and the cybersecurity attack, Mr. Ökkeş, all of things we had planned before this webinar. We have planned as next webinar of @FIMI. So it's like you read our minds about our next webinar. So thank you very much, especially for our speakers or presenters for this webinar. And also I would like to thank all participants from all over the world, from different countries, different continents, from taking into consideration into time constraint and time different zones. And sometimes it is nearly close of the official time, and it is very near to evening. Sometimes it is morning. In some countries. Thank you very much for all participants for your valuable participation for this webinar. So it is planned as we have planned before. Thank you very much, and hope to see you again, and stay healthy. Thank you.
Thank you. You are welcome.
Thank you.
Thank you all.
You are welcome.
Thank
See you soon.